Good morning, everybody. This is Eureka John with the Eureka Street Crypto Hub, here broadcasting live from Leander, Texas, at 7:16 in the morning on May 20th, 2021. And yes, you have tuned in to my crypto video blog. And that's what it is. This is my personal journey in the crypto space, and it's been quite an interesting one for me anyway. And I've been broadcasting live since February 6th, 2021, every single day, every single morning. I have not skipped a morning. And then I've been broadcasting in general, not every single morning, since October 24th, 2020. And I've been into crypto since 2018 and been slowly, I guess people call it orange pilled, where I start to go beyond to just the speculation phase where you first buy in and you're just like, all right, I want to figure out how to do this so I can make some money, to really understanding the big picture of what cryptocurrency is all about and what a paradigm shift it is, and that's happening right now, ushering in a new era, a fourth industrial revolution, a complete overhaul of our finance system as we know it, a way for the average Joe to actually participate in the finance industry. So this is revolutionary, folks. This is not just some speculators playing with magic internet money and people just being degenerates. No, this is where finance is going. And you think you are a shareholder of a company? Well, you're going to be a stakeholder in the future. You will no longer be a shareholder. Even the World Economic Forum is just laying all this out there for you, and people refuse to look at the truth and read and acknowledge what is going on. They think traditional finance is still there. They think there is no great reset. They think COVID has nothing to do with all this. So wake up and open your eyes, people. Even just go to the World Economic Forum website and just read through it. You will see it's just right there out in the open, and people still refuse to acknowledge it and calling people conspiracy theorists. It's just absolutely ridiculous. So if you look into blockchain technology and you look at what's going on, you will see. That being said, let's go ahead and go. And you have to pardon me too. I woke up later today and I thought I had scarlet fever yesterday. Went to the doctor. I actually have shingles and it hurts. So I'm waiting for that to pass through. So, but in the meantime, I'm not going to work and I'm just sitting here. But I'll still do my broadcast and I'll still look at the market. That doesn't require me to be around anybody or do much. So, except for use my brain. But that even hurts right now. So, okay. So let's go over here to the coin gecko. As you may know, we had a major crash yesterday. I believe it was over 40% crash, which is pretty interesting. I mean, it's not the first time I've been through a crash in the cryptocurrency world, and of course there's the famous 2017 crash that everybody knows about. And anybody who went through that crash, a lot of people thought that it was the end of the world and crypto was over, and actually it was just getting started. Crypto in 2017 was very retail heavy. The institutions had not even, they'd barely heard of it by that time. And Jamie Dimon, the CEO of JP Morgan, was basically saying it's rat poison. And well, Warren Buffett, I think he's the one that said that. I don't know, but they're all just calling it just trash, and Warren Buffett still does, but he's never going to change. He's a dinosaur. But Jamie Dimon of JP Morgan, he's suddenly changing his tune. He's gone through the 6 stages of denial, anger, grief, and all that stuff, and now he's come around to acceptance and even promoting cryptocurrency now, saying that they're going to have some bonds and trusts, Bitcoin bonds and trusts. And they're getting into Ethereum and other stuff too. Hey, what's up, 29 LH06? Nice to see you this morning. So yeah, I'm still under the weather pretty bad, but I'm still up doing this. So that's what I do, man. I keep on keeping on, and keep on trucking. I can't even talk. Okay, so Jamie Dimon and J.P. Morgan, Grayscale trusts have the digital asset trust, which includes lots of different cryptos. You have Goldman Sachs that have jumped into the game in various aspects. You just have so many of these large scale banking institutions. BlackRock's been jumping into the game. So so your neighbor or your coworker might say, it's a scam. It's a Ponzi scheme. Okay, all right, whatever, dude. I'll just ignore, all these large institutions jumping into crypto, but I'll listen to my neighbor Joe Bob who calls it a scam. Okay, so, and like I said, you need to pay attention to crypto because you can see what is happening in the greater finance industry, and as a result, as in the rest of our society and the world and how the world is changing. Yes, there is a great reset that is trying to be implemented right now in a fourth industrial revolution. It can be used for bad or good. This is just a technology, folks, and technology, just like nuclear technology, can be used for bad and good. And this is, in my opinion, just as powerful as nuclear technology. It has the power to completely enslave us and put us in bondage, or it has the power to liberate us from the banking institutions. Take your pick, man. Which one are you going to go with? And which side are you going to jump on? Personally, I'm going to jump on the side that helps the little guy remove the shackles of the banking institution. For instance, I just got $102 worth of NSF fees from my bank for 3 little subscription things that popped through at the last moment. And, that's, I don't really keep anything in the banks anymore. And those pop through, and then they charge me $102 worth of fees. Do you realize that Bank of America last year charged the most fees to the average Joe? It was $45 billion worth of fees. And then after that was Chase Bank and Wells Fargo and all that. They are making so much money off the people that they shouldn't be making money off of. And it just grinds my gears. It just boils my blood that they're making so much money off of people like you and me. It's absolutely ridiculous. I wanted to go get lunch from work the other day, and yes, I have a lot of stuff in crypto because I'm desperate, man. I'm trying to find a way to make some generational wealth, and it's becoming harder and harder. And so I have everything in crypto, and it's doing very well, but I don't leave anything in my regular accounts to spare. So yeah, get away from those banks. And like 29LH06 says here, go to a local credit union. That is also an option. You can still find some that are not tied to these large banking institutions, but they're getting few and far in between. And a lot of times, if you want to do transactions and you're using a credit card from a local credit union, a lot of places won't even take that. So something's got to be done. And with Bitcoin, and I believe a lot of these other cryptocurrencies ushering in new technology, it is happening, and it's upsetting a lot of the major players in the industry, and they don't like it. Hence, we have this huge crash yesterday of 40%, around 40%, and Bitcoin dropped. And yesterday, let's see, where did it drop to? Let's see, where did we go? Let's pull up this graph. 24-hour low was $30,000. It dropped to $30,000. Okay. I've been seeing lots of people all over Twitter trying to explain this away some shape or form. Myself, I'm not shaken. I have not wavered one bit in my belief in the future of cryptocurrency and the way that it's going to be taking over every single aspect of our lives. However, there are a lot of people that don't see this overarching vision, and they don't believe in cryptocurrency as a whole. They're still thinking about this in terms of just pure speculation and gambling and stuff like that as a way to make a quick buck on some arbitrage opportunities and stuff like that. So those people got leveraged. And if you aren't familiar with what leverage is, and I'm completely new to the finance thing as well, I've had to learn a lot of this stuff from scratch, and Investopedia has helped me a lot. But being leveraged means, let's say for instance, I have a bunch of Bitcoin, and I want to be able to expand that wealth in a very quick way. So what I would do is I would go to some place where I could lock up that Bitcoin and borrow against it, and then use what I've borrowed against it to lock up and borrow against that, and then that way I'm producing several different yields and APYs, and it's a great way to make a lot of money. But it's a dangerous game, especially the deeper you go into it and the more you leverage out, because if the value of what you have locked up drops below a certain threshold, then it gets liquidated, and they call in that loan, and then they pull out the value of what you've taken out on your loan. Which, if you're only one deep, one leverage deep, okay, it might not be the end of the world. It still sucks. But if you're 2 and 3 and 4 and 5 and even 6 and 7, that some people do, then you are screwed, and you will end up owing a ton of money. If you're familiar with stocks and options, it's kind of the same concept. When people do calls and puts, and and then they end up losing that, and they lose a lot of money. And Twitter has been kind of a suicide watch over the past 24 hours, and some people laughing it off, other people are being really mean about it, and other people are just like, if you need somebody to talk to. But you know what? Don't put yourself in that position. Cryptocurrency, yes, it's volatile. It is the Wild West, but it shouldn't have to be. You shouldn't put yourself into that type of position in order to make money. You can make good money without putting yourself there. And I've made good money. Dollar cost average, no leveraging for me. I'm just, I'm not skilled enough investor to do that. And just stay in the course and in my belief in the cryptocurrency space. I have stuff staked, which is earning interest, and that has had no effect with the value of what's going on. I have my Aave staked, and it's making me money. And the amount of Aave, the value of Aave does not detract from the amount of Aave I have in there and the percentage that I'm earning off of that being locked up. So just use a reasonable approach, a rational approach, and you will come out just fine. For instance, the 2008 crash back, that started Bitcoin, that everybody thought that was the end of the world, and that's when the smartest people were buying. And you buy when there's blood in the streets. And then even if anybody who had some stocks that crashed during the 2008 crash and just held on to them till now, they would be very, very rich people. So just because something crashes doesn't mean it's not going to come back and go 10, 20, 30, 40, 50 fold. So think about that. Be in it for the long run, as 29L06 says here. And what's up, Macy L2021? And nice to see you. I like your Batman face emojis. Oh man. This is why I get up and do this show, to be able to express this stuff. I tried to talk about it with my wife last night, and she looked at me like, "Did you lose all our money?" I was like, No, I didn't lose all our money. So, but but it's going to be sitting there and accumulating in the stake pools for a while. That's for sure. But I don't think that this crash is going to last that long. It's just part of the process. I remember March 2020. I bought a bunch of Bitcoin during that time, and I bought a bunch of Ethereum during that time. And that's when I started buying Chainlink and Theta and all that stuff. In March 2020 crash, I said, you know what? I've been studying cryptocurrency for a while, and I keep on trying to say, well, when's it going to be a good time to get in? And then that crash happened right when COVID started, and I was like, okay, this is it. I'm going to start right here. And I'm really glad I did, because the value of what I have has bloomed quite significantly since March 2020. And I believe the same thing's going to happen here. I just don't have any extra money to put into it right now. And I'm definitely not going to leverage anything. Even though I've been tempted, I'm like, okay, it's already gone down this low. How much lower will it go? Maybe I should just go ahead and leverage at least one thing. It is super tempting. But anyway, let's look at this crash. I saw on Twitter some murmurings of possible conspiracy, and I'm a sucker for conspiracy and some kind of under the table type of dealings being exposed. I love that type of stuff. I think it's hilarious and intriguing. So somebody here found a 4chan thread. That Bitcoin dump was well engineered, I admit. So, do you think this was engineered? Do you think this is an engineered dump? I don't know, man. I think it could very well may have been. I mean, I think a lot of this stuff in the finance industry is engineered. So let me read this to you. And just before this crash, an anonymous poster in 4chan, and be careful what anons say. Sometimes they might be pretending to be insiders and they're not. But, hey guys, insider here. For those of you that are not busy moo bobo LARPing and paying attention, there will be another announcement from China soon. Picture is semi-related. I'm supposing that picture. I can't tell you guys what firm I work for, but it's massive in all caps. And it's working with the PRC, People's Republic of China. The purpose of today's press release, alongside all the FUD, the fear, uncertainty, and doubt, posting, is to get Bitcoin as low as it can before 7 a.m. UCT time. First, there would be a coordinated sell-off to drop the prices below a certain threshold and liquidate one certain stakeholder. Can't outright say who he is, but he bought a lot at the dip that he was partly responsible for. Once liquidated, the plan is then to buy up all the reserves and essentially leave him bankrupted. If you guys want to get rich, grab some coffee and watch for the big dip. Once it happens, things are going to get green really fast. We project 70K, that's all. So this anonymous person came in here. This was before this crash, and posted this in 4chan. And of course, a lot of people here are blowing him off. Who's this person that they are trying to get liquidated? Is it Elon Musk? Is it Michael Saylor? Is it Justin Sun? A lot of people don't like him. I don't think that I would see Michael Saylor going leverage on a lot of his holdings. He just doesn't seem like the type of guy that would do that. Elon Musk, I don't think he's that stupid to do that. Justin Sun, sure. I don't know, man. So let's read on. It all depends on how this is still him, it looks like. It all depends on how many other firms are liquidated in the process. This is going to be big and fast. 35K limit order if you want to be safe, but you can probably go as low as 31.25. Yes, UTC typo. Okay, this has a lot to do with what will happen tonight. I'm the insider you seek. I don't have much time. Everything's going to plan. It's too soon to tell, but the schedule that has changed due to non-compliance greed from another party. The operation has been pushed back to 1 p.m. UTC. Expect 30K. That's a guarantee. So I think that's about 3 in the morning Eastern time. NASDAQ will take a slight hit in the pre-market. It will most likely drop a point by the time the market closes. That's my personal opinion, however, so take it with a grain of salt. This bull run's all-time high tops out well above 100K. Do not trust the FUDs. This movement is just a silly game that the elites are playing. It will be over soon. I must go now. And then somebody, why does everything happen around 3 a.m. Eastern time? And then find how to answer this last thing. So I was curious, and basically he said because that's when everybody over in New York, all the more important people are asleep. And somebody said, you're an idiot, and nobody in New York important is there anymore because of de Blasio and Cuomo ruining the state. They could be in Florida, they could be wherever, just somewhere close enough to where they'd probably be asleep. They could be in Austin, and it would still be 2 a.m. So, yeah, or 4 a.m. Yeah. I can't think. Anyway, yeah, this is the 4chan thread. I will post it in the video comments. So 1 hour to go by your estimation. Do you think Bitcoin can dump all the way to 31.25 in 1 hour? What the F is it gonna, or is it gonna take more than 1 hour? I thought you said 7 a.m. UTC. People calling them, no evidence except a crappy screenshot. Go away, LARPer. I have 29 to 31K as my target to long before seeing these posts. I think this guy may be onto something. All right, let's see here. The biggest meme I've seen on this board is the absolute idiocy of believing that institutions are straight leveraged and spot positions on effing Bitcoin. They're not. They may be leveraged through options, but these are the hedges that helps them when price moves adverse to their core positions. They are not on Binance clicking 100x long all day like poor. Okay. Honestly, this is just a big signal that you're all leveraged to the teeth, hence this mega dump. And he's got a point. Large institutions, like I said, I don't see that Michael Saylor would be, 100x leveraging anything. And I don't think Elon Musk. These guys don't need to. So is this dump just happened because everything was like way overvalued, and that a lot of people are going on Binance and 100x over leveraging things that are just desperate to make some money, and that they don't have any type of head on their shoulders, and they're just believing in sugar plums and fairies that everything's going to continue going up all the time. I don't know, man. That could just be the case. Maybe it just needed a large, healthy correction. I mean, this is not unusual in the cryptocurrency market to see such a large correction, and then after that, it just keeps going up and keeps going about its business. The reason that I'm all in on crypto is because I have looked back in the past history of crypto, and I see nothing but it completely overtaking, and then I'm understanding the technology and seeing how that is overtaking various in all aspects of life along with artificial intelligence. And yes, that is the direction things are going. So it has nothing to do with me speculating on some charts, but there are people that do, and 100x is quite large. And you don't do that because you have to recognize that in order for growth to happen, there has to be a reset to happen, and pretty severe resets. The higher the growth, the more severe the reset is going to be. But a lot of people are saying, no, man, this is just standard Wyckoff distribution. And I have no idea what Wyckoff is, so I went there and went to Investopedia and to get my crash course in finance education like I do. And I was like, okay, dude, what's the Wyckoff distribution rule? It seems to be something fairly common in the finance world that they tend to reference. Legendary technician Richard Wyckoff wrote about financial markets at the same time as Charles Dow, Jesse Livermore, and other iconic figures in the early decades of the 20th century. His pioneering approach to technical analysis has survived into the modern era, guiding traders and investors on the best ways to pick winning stocks, the most advantageous times to buy them, and the most effective risk management techniques. His observation on price action coalesced into the Wyckoff market cycle that outlines key elements in trend development, marked by periods of accumulation and distribution. 4 distinct phases comprise the cycle: accumulation, markup, distribution, and markdown. He also outlines sets of rules to use in conjunction with the phases to further identify the location of price within the broad spectrum of uptrends, downtrends, and sideways markets. The first rule tells traders and investors that the market and individual securities never behave in the same way twice. Rather, trends unfold through a broad array of similar price patterns that show infinite variations in size, detail, and extension, with each incarnation changing just enough from prior versions to surprise and confuse market participants. Many modern traders would call this a shape-shifting phenomenon that always stays one step ahead of profit-seeking. The second rule raises the misunderstood issue of market relativity, telling traders and investors that context is everything in the finance markets. In other words, the only way to evaluate today's price action is to compare it to what happened yesterday, last week, last month, last year. A corollary to this rule states that analyzing a single day's price action in a vacuum will elicit incorrect conclusions. Wyckoff established simple but powerful observational rules for trend recognition. He determined there were 3 types of trends: up, down, and flat, 3 time frames: short-term, immediate-term, and long-term. And he observed that trends varied significantly in different time frames, setting the stage for future technicians to create powerful trading strategies based on their interplay. It doesn't seem like revolutionary stuff here. He's just basically saying that there's past, present, and future, and short, long, and stable, and flat. So the new cycle begins with an accumulation phase that generates a trading range. The pattern often yields a failure point or spring and marks a selling climax ahead of a strong trend that eventually exits the opposite side of the range. The last decline matches algo-driven stop hunting, often observed near downtrend lows, which price undercuts key support and triggers a sell-off followed by a recovery wave that lifts price back up support. And then the market phase then follows, measured by the slope of the new trend, pullbacks to new support, offering buying opportunities that Wyckoff calls throwbacks, similar to the buy the dip patterns in modern markets. Reaccumulation phases interrupt markup with small consolidation patterns, while he calls steeper pullbacks corrections. Markup and accumulation continue until these corrective phases fail to generate new highs. That failure signals the start of the distribution phase, with range-bound price action similar to the accumulation phase, but marked by smart money taking profits and leading to the sidelines. In this turn, this leaves the security in weak hands that are forced to sell when the range fails in a breakdown in a new markdown phase. This bearish period generates throwbacks to new resistance that can be used to establish timely short sales. Interesting stuff. The slope of the new downtrend measures the markdown phase. This generates its own redistribution segments where trend pauses while security attracts a new set of positions that will eventually get sold. Wyckoff calls the steeper bounces within the structure corrections, using the same technology as the uptrend phase. Markov finally ends with a broad trading range of base signals, the start of a new accumulation phase. The bottom line, Richard Wyckoff established key principles on tops, bottoms, and trends in tape reading in the early decades of the 20th century. The timeless concepts continue to educate traders and investors nearly 90 years later. That may have been boring for you, but interesting, at least just to know that it's there, that there's words, that somebody has put words to something. I think right now we have a major correction. I don't know if it's manufactured or not, or if it's just the standard Wyckoff distribution rule. But now whenever you're on Twitter and you see somebody mention Wyckoff distribution, you will vaguely know what they are talking about, at least. And that is what I strive to do, to kind of to go beyond, a little bit beyond just going yeah, okay, yeah, and actually kind of understand maybe what somebody's talking about. So so that's about that. That pretty much wraps up this show, just kind of trying to understand this dip a little bit. I know right now this is everything that's in the news, and I try not to cover exactly what's in the news and what everybody else is talking about, because it gets kind of repetitive and boring. But hey man, this is my take on it, you know. And I'm still sick, so I haven't had time to deeply go into anything. All right, so I will talk to you guys tomorrow, and I'm gonna be working from home tomorrow too, so I'll probably be going on a little bit later again, and then of course I'll be posting all this up on YouTube like I always do, and Odyssey and BitChute. So give me a thumbs up, and I hope you feel better soon. Apparently shingles only lasts around a week, but it is painful. Shingles sucks. It feels like somebody wrapped a thick rope around your middle of your body and it's just going. Yeah, so it hurts to move, breathe, or do anything. All right, man. I will talk to you guys tomorrow. All right, bye.